Question 3 is from BTR_S. How will the traditional high street banks respond to growing technology disruption and consumers switching accounts to new fintech players?
Well, I guess we should say that we're not seeing that at the moment in terms of it happening today. I think it's quite easy to be at a bank and say, well, where are all these millions of customers switching? What are the switching rates at the moment? Where does it look? That's not to say that it won't happen in the future. But I also think that big banks, small banks, and everyone in between aren't resting on their laurels. I think everyone knows that there are big changes coming. You've probably heard us talk quite a lot about a change from digitising what has come before into creating things that are digital, and from commodity products into intelligent services. And that breaks the business model, the operating model, the way you go about a lot of these things. So I think with that in mind, we're seeing two approaches. Almost a two-pronged approach with big banks. One, drive the improvement of their core business, improve their technology, bring more people in online, drive down the costs that it costs in order to serve customers, while at the same time understand that while you're doing that for in some cases tens of millions of customers, how are you developing these intelligent services, these next generation propositions? So I think, we know from working with a variety of clients on both sides of that equation that is going on, and that people, while they're not seeing big switching rates at the moment, while Revolut's up to 1 million customers or something, there are 65, 70 million current accounts in the UK. So we're only really just seeing the start, but I think the big banks are well aware.
I think the thing is as well is I don't think it's fintech and challenger banks taking over is not a revolution. This isn't cars being flipped in the street and people throwing stuff through windows to change overnight the sort of face of what banking actually is. For all intents and purposes, I have left my bank. My bank just doesn't know that I've done it yet. So on a day-to-day basis, I'm using the Revoluts and the Monzos to be managing my world, but the bank that I have still has a customer. Now, if they analyze all of the information and the data of actually what the level of engagement, the actual relationship that I have now with the bank that the big incumbent bank that I have an account with still, then I think it's how do they measure a customer, really? If a customer is somebody who just still has an account with me and that's the mark of success, then I think it's going to be a long time until we see those guys really fearful of it. If at the point where that happens, you've already we talk about the sort of lack of love there in terms of that scenario, but once that love is gone, and actually I think getting them back, if you suddenly see the only transactions that are actually happening in that space are somebody transferring money to a Monzo card, which we've definitely seen in lots of instances in some some of the people who work at 11FS, but I think that it's a slow bleed out rather than a very quick mercy kill, I'd suggest. So
and there are some assumptions in the question. I guess you're talking about vertically integrated banks, the move from a big bank to a challenger bank. But I think more interesting in that competitive space is this sort of platformification that actually is unbundling what a bank does. In the end, you've got this sort of product engine, the place that the balance sheet sits, where lending happens from, where deposits are taken, and that has to be crazy lean and really, very low cost in order to provide that platform. And we're seeing some players coming along like Solaris or Clearbank that just specialise in that area. Then you've got the intelligent services layer, how do you take that basic data, that basic account, and make people's lives better or deliver really great real-time intelligent contextual services. And then even above that, you've got how does that integrate into a variety of other areas? How do you create an app store? How do you integrate into end-to-end journeys? How do you really sort of then take financial services and contextualize it in people's lives? So ultimately, will it be one vertical bank fighting another vertical bank, or will it be a number of providers at various different levels essentially fighting on their own and with groups in order to create dominance? And I think it's probably the latter. So I think it becomes less as to where you've switched as to where does your money sit legally, what are the services you're using, and how do apps and integrations sit over the top of that. I think it'll get more complex before it becomes simpler.
It's going to be interesting. So where do you think I guess in that scenario that if we're in a situation where people never close the accounts because of we don't have to, and open banking and kind of everything that comes through. It's like most people don't unsubscribe to a newsletter of that they don't like, they'll just delete it. There's going to be no pain to a customer to keep a current account open that they don't use. That's actually the emphasis is it's going to be very difficult, because obviously the incumbent organizations, or any organizations around we've seen this happen with not just the big banks, but N26 closed a bunch of accounts that were dormant because people were opened account, didn't necessarily get to use it as their full-time current account, and therefore it was costing them money. It's going to be really interesting to see how much of the operating cost of the organization is going to be made up of the zombie bank accounts, because the customer has gone, but the cost still remains. But we don't know. It's going to be really interesting to see how it plays out there.